Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing ARC Resources so we can determine if it's a buy or a sell. ARC Resources is an energy company with operations focused in the Montney sections in Alberta and Northeast BC, British Columbia. They produce 345,000 barrels of oil equivalent per day. Its portfolio includes natural gas liquids, and crude oil. But NGL is its biggest by far. 60% of its production is natural gas liquids. The company is headquartered in Calgary, Alberta, Canada, and was founded in 1996. Let's get started with the model. This is a large cap company, 10 billion market cap. They're trading at $16 a share, and they have 621 million shares outstanding. We'll look at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had negative 45 million in 2019, a nice improvement to 320 million in 2020. Then it tripled to 950 million in 2021. Then it more than doubled into 2022 at 2.4 billion. So they're growing really well. Net income is the profit or loss on the income statement. It's revenue minus expenses. Negative in 2019 and 2020, a nice positive in 2021, and then they blew up in 2022, 2.3 billion. Revenue is a sales for the company, and that went down from 2019 to 2020. Then it blew up in 2021, and it grew even more in 2022, almost 10 billion Canadian dollars. Let's look at the capital structure. 7 billion of equity, 2 billion of debt. They're 79% equity, 21% debt. And they have a pretty high WACC, weighted average cost of capital, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year for, that's almost 10 billion. We discounted those numbers back to today using the weighted average cost of capital, and we get a value of the company of $9.8 billion. We divide that by 621 million shares, and we get a calculated stock price of $15.74. They're trading at $16.19, so they're trading at a 3% premium. It's a sell according to the model. The website simply Wall Street's valuation is $24. They say it's 34% undervalued. 16 analysts priced this stock, and the average price target is 22. They say it's 37% undervalued. They pay a dividend of 15 cents a share, up from 5 cents in 2019. That's a yield of 3.7%, which they can definitely afford. It's only 15% of their free cash flow, 16% of their net income. This is where the stock has been trading since 2002. Their highest point is $35 a share beginning of 2014. But when COVID hit, and the oil crash in April 2020, the stock fell below $5. Imagine picking up way back then. That would have been a great time. Of course, most of us were out of cash because all our stocks went down. It did run back up to over $20, but it has been trading between 15 and 20 for a little over a year now. There are 81 companies in the same industry as ARC, and the average company pays a dividend yield of 2.8%. The median is 3.1%. They're at 3.7%, so they're above both those numbers. I converted all the market caps to Canadian dollars, and they rank 17th. The average company has a 9 billion market cap. The median is 1.9 billion. And they have really good ratios. All their ratios are much better than the average and median. Look at their price to sales, a 1.0. When a company has a price to sales of 1.0, that means their revenue is pretty much the same as their market cap. So to summarize, I have them trading at a 3% premium. I rank their free cash flows and revenue 9 out of 10. Their ratio is 8 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.